If you're looking to purchase a new home in 2021, most people's starting point is to look at mortgages and mortgage eligibility. So I was hoping to run through the mortgage process in terms of how much you can borrow, what rates are like on market at the moment. We're starting into January, there's exceptions available. So I was hoping to run through those, plus costs and the Help to Buy scheme for first time buyers looking to purchase a new property. So to start with eligibility, so most of our clients would come to us and they'd say, okay, I want to establish how much I can borrow. I want to get approval in place. We work at 8 major lenders, so we would work with our clients to establish how much they can borrow and what lender might be best for them. So in terms of establishing how much you can borrow, the lenders all work under what's called macroprudential central bank lending rules. So that means that you can borrow up to 3.5 times multiple of your allowable income. And allowable income is made up of your gross basic guaranteed income plus a portion of your variable income. So your variable income can be overtime, bonus, it can be shift allowance that's not guaranteed. So the banks will take the total of what's allowable into account and multiply that by 3.5 times. So you're allowed to borrow 3.5 times multiple of your income. As a first time buyer, then you have to have a 10% deposit. As a second time buyer, you have to have a 20% deposit. So that can be difficult, especially from the second time buyer's perspective, but also as first time buyers. The Help to Buy scheme is available for first time buyers purchasing new homes, which means you could be eligible for up to 30,000 back via the Help to Buy scheme. You should assess your eligibility on the Revenue website. You'll input your details, your PPS number, and they will revert with the amount that you're eligible for based on prior tax credits and tax paid. So that can form part of your deposit amount if you're a first time buyer purchasing a new property. Your loan to value has to be 70% to be able to be eligible for the Help to Buy scheme, and the max purchase price is 500,000 in terms of a house. If you're looking for an exception to the central bank rules on the 3.5 times multiple of income, the banks are open to same right now in January. So what they look at is they look at their own credit policy as opposed to the 3.5 times multiple. Some lenders operate on an increased multiple basis. So some lenders will go to 4.5 times, 4.75 times your income. Other lenders look at net disposable income, and they look at how much you need to service your family lifestyle. They'll put a family living allowance or a single person's living allowance off your net disposable income, and then they'll look at whatever else is left can service the mortgage. If you have short-term loans, they will take that into account as a deduction against your net disposable income. Now that can all sound very complicated, but that's what your mortgage advisor is there to do, to work with you as to what can be taken account into as your allowable income, to work through what bonus has been proven in prior periods, because that needs to be established so you can put the best picture forward to the bank. And if you're looking to kind of for max eligibility, then that's really, really important to work through prior periods to show that income and the variable income is sustainable going forward. So that's your how much you can borrow, the deposit amount you'll need, and a little touch on Help to Buy. But again, there's a lot more information on the Revenue website in terms of Help to Buy, and I would suggest that anybody who's looking at new builds and are first time buyers do apply on the Revenue website and get your approval or your approval for the Help to Buy scheme so you know exactly how much you're eligible for. If I turn to rates then, rates on market at the moment, again, we work with 8 major lenders. They differ in terms of the rates they offer. At the moment, fixed rates in January, as it stands, January 2021, fixed rates are lower than variable rates. And that's been the position for probably over 12 months. So fixed rates are very popular. 75% of new mortgages were taken out on a fixed rate last year. So the 2, 3 and 5 year fixed rates in particular are very popular with first time buyers. They offer security. Initially when you take out your mortgage, you want to know how much you're paying while you get settled into the mortgage, buy your furniture, all those costs that you have initially. After that, then once your fixed rate expires, you automatically roll onto a variable rate unless you choose one of the lender's fixed rates. So what happens is, say if you took a 2-year fixed rate, at the end of the 2 years or 90 days before that, your mortgage provider would send you a letter to state your mortgage rate is going to roll off. These are the rates we offer. This is the rate you'll default to if you don't make contact with us. So what we do with Doddl with a lot of our clients or all of our clients is that when they're coming to the end of the fixed period, so 6 months before, we would say, okay, you're going to be rolling out. We need to kind of think about this, because you have to be just so conscious of the fact that the more you pay in terms of interest, it's adding no value to your mortgage. So don't roll off onto those default rates. Be really active in terms of managing your mortgage interest and trying to ensure you pay as little as possible or accelerate the repayment on your mortgage so you pay as little as possible interest over the full term of the mortgage, because mortgage interest adds no value to your mortgage. You need to make sure you have the lowest mortgage rate available. when you take out your mortgage, sometimes people aren't aware that you can absolutely move to another lender. So while it's a massive decision in terms of what lender you choose to take your mortgage with initially, just to be aware that if things change, if the market changes and your lender isn't as competitive going forward, then absolutely you can look to move to another lender. It's called mortgage switching. So the market is very much open for mortgage switching, and we would have a large volume of clients who would switch their mortgage at regular intervals to avail of better interest rates to pay as little as possible in terms of the overall interest that they repay. So in terms of rates, again, fixed rates are really popular. At Doddl, we would provide our clients with the rate schedule. Some lenders are better at lower rates than others. So some lenders that offer a cashback offer, the 2% of the mortgage back in cash, tend to have higher interest rates. So when you're looking and you're working with a broker or you're working with Doddl to assess what lender might be best for you, we will absolutely look at the lowest rates on market, and we'll also look at cashback offers. So you make an informed decision as to what's best for you, being mindful that the cashback rates tend to be higher. So if you take a mortgage with a lender that offers cashback, and there are 3 on market, their rates tend to be higher than the lenders that don't offer cashback. So we would do a cost benefit, we would discuss with the clients what their requirements are and make the best decision for the client at that time. Some lenders have green rate discounts, they have current account opening discounts. So there's a kind of a huge array of different rates and options that are there. It's very, very difficult to understand or work through that on your own. At Doddl, we have been working in mortgages for 17 years, so it's like second nature to us. So it's really, really important to work with a mortgage specialist when you are looking at interest rates and at taking out a new mortgage. So in order to purchase the property, you must engage a solicitor to undertake due diligence in relation to the purchase. They do searches, they check the contracts, they ensure that when you are purchasing that property, that you are going to be going through the correct legal process and have full ownership of that property. They provide assurances to the mortgage lender that everything is in order in relation to the legal process. So in terms of the cost on the legal side, I would suggest that you'd budget £2,500 for your legal fees. The other costs in terms of purchase are your stamp duty. You will have a 1% stamp duty amount that you will need to pay in order to complete out in the purchase of your property. So that's a tax, effectively a government tax. So it's 1% of the purchase price of the property. So you will need to have that along with your 10% deposit, and also budget for your stamp duty, your legal fees, and also your surveyor's report and your valuer's report. So if you were talking about a €300,000 house, you would have a €30,000 deposit, you'd have say 500 for your survey, you'd have 2,500 for your legal fees, and then you have to add on the stamp duty, which again would be €3,000. So budget all of those items together so that you know exactly what you need to have when you're going and when you're purchasing a property, and you're not surprised by any of these elements when they are put to you. So that kind of covers, I suppose, mortgage eligibility. It covers deposit. Again, your Help to Buy scheme is available to you if you're a first-time buyer purchasing a new property up to the value of 500,000 and with a loan to value of 70%. It also covers then costs in relation to the process to complete out in the transaction of purchase. So rates are really important. We've discussed those in terms of the fixed rates are lower than variable rates. Fixed rates provide certainty over the repayment during that fixed period. Variable rates can go up or down. Cashback offers can be really attractive but tend to have a higher interest rate attaching. So just to be mindful of that, we would always do a cost benefit with our clients at Doddl just to ensure you're aware of what the cost might be to take the cashback. It may be that you choose to take the cashback, and that's absolutely no problem provided you're making an informed decision. The important point also is that while you're taking your mortgage with the current mortgage lender, you will really need to review your mortgage at regular intervals. And that's something we do with our clients at Doddl all the time. So we would class ourselves as your mortgage partner. We would work with you at regular intervals to switch your mortgage if it made sense to do so. So if your own lender wasn't offering a preferable rate or an optimal rate for you, your loan to value changes. And what that means is the mortgage relative to the value of the property can change. So if your loan to value decreases, the rates tend to decrease also, provided you update your valuation and provided you update the value of your house with your lender relative to your mortgage. So we would cover all of these items with our clients right from inquiry to completion. So we're with you full way through the process, from inquiry right to when you get your keys. We're a sounding board when you're bidding. We're with you when you're trying to get the maximum mortgage approval, which a lot of our clients would want in urban areas. We can advise on exceptions, we can advise on rates, we can advise on the whole process and just make sure you understand what's happening from start to finish. The big point being that we do this every day, all day, every day. For most people, they have a handful of transactions in terms of mortgages. They move or they buy their first home, they move just a handful of times. Most people then switch quite often, or they should switch quite often to ensure they're paying as little as possible. So overall, we're there with you as your independent, impartial advisor to help you through the process from start to finish in terms of purchase to completion. We're also on hand thereafter as a touch point to come back to us to say, is it time for us to switch? Should we be changing our rate? So please do contact us at Doddl if we can be of service. We offer a free and impartial service, access to 8 major lenders under one roof, and we will work with you from start to finish to make your mortgage journey as easy as possible and to complete out in the main aim being the house purchase. So please do contact us, register on our site at doddl.ie, and if we can be of assistance, please do contact us by phone, by email, or register again on our site